Good morning. Today is Thursday, June the 1st. Of course, this is the start of a brand new month. And the latest update as far as the US debt ceiling is concerned, we just had news in the morning that they had actually put it to the vote in the House of Representatives. And the latest news is that it has already passed through the House and now is on its way to the Senate for their voting, and which should not pose any major problem because the Senate is controlled by the Democrats, which is the President Biden's party. Once that is done, it will be sent up to the president for his signature to be signed to law. So all this could happen very, very fast. And this is the latest update. Of course, if this is the case, then of course equity markets is likely to rally tonight in New York. So let's prepare for that. So right now, what you can see on my chart here is the Dow Jones 4 hours time frame. Obviously, there has not been no update since the market closed last night. The market right now has already gone back to above 33,000, getting ready for a rally. So this could be what we'll be seeing going forward. And the near-term target is obviously the May high of 34,257, which is this level over here. And this is of course stacked below the year high at 34,342, which is this level over here. So by and large, we should see equity prices rally on the news of a successful passage through the House, which was earlier on at least 29 right-wing Republicans voting against it, but now it seems that the Democrats within the House has managed to swing the vote over. So this is definitely going to be greeted with a sense of relief. But obviously the US is not out of trouble because we have a lot of other issues, including the banking issues, including the liquidity issues, and of course we know the real commercial real estate is collapsing. So all this could pose a real problem. And when the bill get passed through in terms of the debt ceiling, now what this debt ceiling is all about, they're going to suspend it instead of lifting the limit. They're going to suspend it for 2 years until way past the 2024 presidential election into 2025. So does it give the government carte blanche to actually go ahead and borrow till the cow come home? So nobody knows exactly how bad it will be because this is definitely inflationary. So that means going into the mid-month FOMC, which is the Federal Open Market Committee meeting, that could pose another problem for the Federal Reserve because that means inflation is going to come rolling back because the amount of money they're going to raise is going to impact the market. So do watch out for the side effect of a passage of this debt ceiling deal, suspending it for 2 years until 2025. Okay, over in the S&P 500, we can see the prices has pulled back from the previous day high at 4,231. Now it's sitting just above where I thought there would be likely to be a buying interest. That level is 4,162 to 4,167.5. Now, will this market hold at this level? I hope it does because I think the market right now is very buoyant. Shortly, I think the market will be challenging this bracket of prices, which I think may actually induce profit taking. This level is 4,240 to 4,340 levels, which is stacked just under where the last August high is at 4,325.3. So even the market can actually go beyond the last August high, then there will be another layer to contend with, which is going to be even more formidable. That level is 4,375 to 4,520 levels. So do watch out for these two levels, which I think will pose significant resistance to higher prices. Over in the Nasdaq 100, Nasdaq obviously has been charging higher, and this is where the market is right now, 14,520.17 as of the end of Tuesday. So we can see the price did pull back a little bit, but did not pull back deep enough for us to actually anchor in a buy position. For those who still dare to buy, I for one would not dare to buy anymore because this market is seriously overstretched. If the market do pull back to something like 13,900 to 14,100, I think that level could actually see the return of some buying interest. I think the market likely to stay within this bracket of price for the time being, 14,135 to 14,712. Now, in the event the market do take out this level, the most crucial level, in my opinion, will be the last March high at 15,265.4. And if this level is taken out, the entire structure, as far as the daily time frame is concerned, will turn bullish. Okay, so do watch out for this eventuality if it happens. Over in Asia, we can see that the market did not react violently, although the market was on the way down. As of yesterday, this morning, we see a bit of a bounce, but this bounce in the Nikkei does not seem to be sustainable. They may actually pull back. So in the short term itself, the high is 31,560.4, and this is the highest since July 1990. So this is a significant rally here. So unless we see a more significant pullback, this rally may still have some more leg left. So we have to see what happens as the days goes by. In the Hang Seng itself, we see the Hang Seng actually managed to rebound. The low is 18,044.86, which is yesterday's low. So this morning we can see a bit of a bounce, and this bounce is actually going to be quite constructive because it's coming within the bracket of prices which I think may entice buying interest. That level is 17,775 to 18,256. So from here onwards, very likely we will see at least a bare minimum of pullback from this level. I would think somewhere in the 50% range, and that level would be 19,366. So this will be the immediate target for this rebound here. This can only be seen as a technical rebound because this morning we have the manufacturing PMI from China. It is not good, and the prices should not be able to rebound significantly. Okay, so over in China, we can see that the CSI 300 has also rebound off the yesterday's low, or rather this yesterday's low at 3,781. So that's within this bracket. I have already mentioned that there's a very good likelihood that the buying interest may actually come back, meaning to say that there should be some kind of profit taking. And this morning, as far as we can see up to now, this seems to be the case. So if the market do bounce back using the same measurement that I did for the Hang Seng, maybe we can see at the minimum a pullback. Let me see, this could be an area which I have to do some adjustment here. It's definitely not 75, it's probably going to be 5. So it's probably going to be about 3,894. Okay, there about. So do watch out for a minor rebound, and if you can go beyond 3,920, that will be very, very good. That gives rise to the possibility of another extended rally all the way to 4,076 to 4,117. But in the meantime, I think this will be the immediate barrier you will have to climb before we can see higher prices going forward. And in the energy market, as far as the WTI is concerned, WTI actually hit a new marginal low for the week on Wednesday at $67.01. Okay, and market seems to have stabilized and is getting ready to rebound. This bracket of prices, now this is a brand new level, just under $66 to $67.84. This area is actually quite conducive to buy because it's a very low risk setup. Just have to put the stop just below $63.70 for the idea that the market will challenge the May high at least at $76.07, perhaps all the way to $78. Okay, so do watch out for this possibility here. And in precious metal, we can see gold prices continue to hold on to its gain that we've seen lately. Overnight, we can see that the gold market actually went up to a high of $1,974.80. So this is actually quite good. This is constructive for the bullish case. So if the market do pull back a little bit to $1,948 to $1,954 thereabout, I think that area will be conducive to actually anchor in a long position. I have not gone long yet, but I'm looking for levels, and if this is the case, the immediate level, a barrier to higher prices obviously will be this level here, which is the May 19 high at $1,984.26. So if this level can be conquered, the market has the potential to go all the way to test the $2,000 level. So this will be one level in which you want to watch out for the re-emergence of selling interest. By and large, this is a technical rebound. I do not believe that the market has already seen its bottom. There will be another move downwards later on as the new month progresses. Okay, over in silver, we see that the silver rebound is a lot more sustainable. We have a minimum three-way pullback with the market actually gone back into my buying zone at $22.95 to $23, and the market actually took off from here. Okay, so this is where we saw the market actually pull back on, and the current level is at $23.54 thereabout. So it does look good for the market to challenge the mid-May high at $24.21. Over the dollar, we can see the dollar is coming back down, but not before the market edged higher to 104.62 yesterday morning on the news that there was some resistance within the Republican Party that's going to vote against this debt ceiling deal. So that was the market reaction, but since then the market has come back down. The dollar looks like it's going to challenge the immediate key level here, which is the May 26th low at 103.70. 72, 71, thereabout. So if the market can close below this level, it will be on course to go down all the way to 103. So 103 to 102.50, I think will be a great level to pick up some more long position in the dollar index, because I think there's a very good chance the dollar may actually continue to edge higher in the days ahead. Okay, over in the currencies, we can see the euro dollar has also managed to rebound from the low of 106.35 and is currently trading at 106.90 levels. This one is very similar to the dollar index. The immediate barrier to higher prices will be the May 26 high at 107.60 levels. So if the market can close above this, then it's on the way to 108.85 to 109.35. Over in sterling, have a more robust setup here, and the market looks like it's going to unfold in a three-wave rally all the way to test the 124.90 to 125.40 levels. So this area, do watch out for selling interest, because I think if the dollar bull comes back, and then this will definitely impact this currency on the reverse side. Okay, over in the Aussie dollars, you can see the Aussie also managed to rebound off the $64 level, 64.5 level, and it's currently trading at 65 cents. And the immediate barrier to higher prices immediately will be the much low at 0.6565 to this black line that was previously the support and resistance. If we extrapolate, it's somewhere around 0.6580 levels. So anywhere between 0.6565 to 0.6580 will be the immediate barrier to higher prices. I suspect the market will go up into this level, pull back a little bit before it goes up to 0.665 to 0.6695. So this will be a much better level to anchor shorts. Okay, over in dollar Canadian, we can see that the market actually attempted to rally yesterday and failed at 136.50 levels, just under the previous high here, 136.55, and has seen pullback very sharply. And this is actually confirming the idea that perhaps the market has already peaked at 136.55 and is getting ready to pull back. So if this pullback sustained at the bare minimum, there is a possibility that we may see some kind of more persistent pullback. Let me see if I can draw this a little bit, move to the right. Okay, this one has to be removed. Let me draw this for you. So if this is the high at 136.55, the nearest target area will be this cluster of prices here, somewhere around the 1.35 levels. So if the market pull back, this cluster of levels should actually act as some kind of support here. 1.35 could be the area. Okay, dollar yen is where I've already gone short. Yesterday the market high was just under 141, despite the dollar rebounding in the dollar index, both in the dollar CAC as well, to a new marginal high relative to what we saw on Tuesday. The dollar yen did not budge. It maintained the same high on Tuesday at 140.93, and market is coming back down. Immediate support level is probably this pivot line here. This pivot line is currently at 138.75. If the market closes below here, it will be on its way down to challenge the 133.50 levels, and this is a big drop here. So position for that and watch out for this eventuality. Now over in the cryptocurrency, we can see the Bitcoin actually come back down again, which is a disappointment. I was actually long, and now I'm stopped out with no loss, or I move my stop to break even. Looks like I will have to go back in again later on after I record this this little presentation here. So immediately I think Even as the market pulls back to 26,625 this morning as we are speaking, this level is actually quite conducive to accumulate long positions. Let's see whether that is the case. And if that's the case, I think the market have a good chance to go back to $30,000 level. So do watch out for this possibility. In the meantime, I'm still maintaining a slightly bullish outlook on the crypto itself. In the meantime, that's all I have for you. You take care and do expect some kind of volatility in tonight's New York trading. Bye bye. Take care. I'll see you tomorrow.